how you manage risk and assess risk in your life. You assess risk whenever you cross the road. You look right and left and right again. You assess risk when you make a decision about what to have for supper. You absolutely assess risk when you look at making decisions around insurance. But the COVID-19 pandemic has also changed how you might want to assess risk. I mean, certain things that we never thought would happen, a pandemic, suddenly did. Michael Goemans is the CEO at Investec Life. Michael, good afternoon to you. How do you think the pandemic and the lockdown which is associated with it have changed the way we assess risk?
That's right, Stephen, and good afternoon to the viewers. You're absolutely right. You know, it's not something that many, if any of us, expected to happen in our lifetimes, and it does impact how we see things and how we view risk. And whilst we shouldn't minimize or underplay the risks of COVID-19 and the pandemic, particularly if we're older or more vulnerable from an existing medical condition perspective, as South Africans, we've also got to just be aware that there are lots of other risks that are out there and that we need to ensure that we are sufficiently protected against. So as an example, we wrote an article recently about just making sure that our risk perceptions don't become overly skewed by the pandemic, and we worry only about COVID-19, potentially to the detriment of other considerations. And so as South Africans, you know, we've got lots of other considerations that we would normally take into account. So Stats SA, as an example, tells us that 400,000 people die each year in South Africa from other natural causes, you know, which is, depending which measure you use, at least 10 times the COVID death so far, you know, if you use some of the extended excess mortality measures. And if there's any silver lining to this pandemic, and to be honest, there aren't many, but it's that maybe we can use it as a catalyst not to take our health for granted and to put actions in place to protect ourselves more widely than just COVID. So we can maybe use it as a trigger to just take stock of are we sufficiently protected? Are we managing our lifestyles, our health, our finances a little bit more broadly, and use the pandemic as a trigger to do that?
There's a really interesting conversation to have about the difference between risk, what I need to prepare for, what could happen, and what I'm scared of, in other words, fear. So let me give you an example. I'm probably more scared of suffering a violent crime than I am, say, of contracting cancer, even though it is more likely in my lifetime that I would contract cancer than be the victim of a violent crime.
Absolutely right, and that's your personal prerogative. You know, so often we talk about, and this is true. So our business does life insurance, disability, illness cover, and investments as well. And in all of those, you do really have to consider your own personal risk appetite, because a lot of insuring yourself is about giving you peace of mind. So if it's something you're worried about, you can get protection against that. But you're right, Stephen. I mean, you should also take into account the things that are most likely to happen. You know, it would be foolish to insure. Like, here's an example. Maybe, I'm sure she won't mind me sharing. My wife is petrified of flying in an aeroplane. Cognitively, she knows that that's actually a very low-risk thing to do, but she's got a phobia of it, you know, and that's fine. Different people are worried about different things, but that doesn't mean that she shouldn't have life insurance that protects her against the stuff that's actually more likely to happen as well.
It's unfortunate that no one offers insurance against snakes. I know some people who would certainly take that up. Okay, I mean, one of the things about a pandemic, and man, there are restaurants around the world who are counting this cost. No one ever thought it would happen. It's like an earthquake. It's not going to happen here, right? And now we're seeing that this once off is going to be the end of so many businesses.
Yeah, absolutely, Stephen, and it's incredibly sad, you know, and that's why a lot of the focus at the moment is is not only about dealing with the health consequences and the virology of it, but also about how do we kickstart the economy, how do we grow the economy again, how do we get those businesses back on their feet. I think that has to be an incredible focus for the country and business South Africa at the moment.
How do you assess things like that, though, a pandemic? I think there's a phrase, is it Fattail risk, something like that? That it's actually quite difficult to assess how much protection you should give yourself against something that only happens once a century.
That's right, and that's exactly the right description. So fat-tailed risk is economically, it's something that's got a very low likelihood of happening, but if it does happen, it could have a massive consequence. It could be a very extreme event, and a lot of insurers, that's exactly what their risk and capital teams have to do. They have to assess if a worst-case scenario should occur, like a pandemic, or It could be a range of things, operational risk events, market crashes, and the like. The insurers need to make sure that they are sufficiently well capitalized, they're well covered, they've got the risk management approaches in place to withstand events like this. And South African insurers are a good example. They do have sufficient reserves and buffers to withstand even more than a 1 in 100 year event. You know, the regulations in this country require you to make sure your business can withstand what they call a 1 in 200 year event. So that's exactly what a lot of the technical teams behind the scenes in these companies do.
Right. The issue of health insurance, I mean, generally very, very important. We have all sorts of indicators that show we're not a healthy nation. Are we taking health seriously enough? I mean, it's so interesting to see how so many of the indicators show we're getting heavier. We're actually putting ourselves at risk a lot of the time. I mean, we're not necessarily taking health insurance properly, seriously.
You're absolutely right. And again, if there's another trigger we can take out of this, it's that we do need to pay attention to our health, both physical and mental health. You know, and we actually wrote a very interesting article on this recently about how one really needs to pay attention to that, because often your health is invisible until it isn't. So it almost whispers to you, Stephen. That's a nice analogy I like to use. It whispers to you until one day it screams. And then it can be too late to do something about it. You can't necessarily recover it if you've lost it. Mm-hmm. So as South Africans, we do need to pay attention to that, both physical and mental health. And maybe we can use this as a trigger to do that.
I'm interested that you mentioned mental health, because if you go through any insurance schedule, particularly for life insurance, the business that you're in, what you really do find is that there'll be all sorts of things that, you know, if you lose a leg or if you break an arm, if you get a dread disease, I'm not really aware of what people are covered for when it comes to mental health.
No, you're absolutely right. And I think there's a big opportunity for insurers to really keep things very clear, very simple for clients, and to help them during their times of need. So I think that's what people as consumers of insurance are looking for, is something that can help them. You don't need insurance during the good times, right? When you're fit, when you're healthy, when things are going well. You need it when things aren't going well. And that could be physically, it could be mentally. Life cover is a relatively obvious one. You die, you should be able to get paid. But some of the other main product lines, like products that are disability or income protection products that pay you if you can't work, those should be able to cover, very simply, both physical and mental illnesses and injuries that could result in the person not being able to work or being severely impaired.
For most people, many people, insurance is something that's nice to have. It's aspirational, but you can't really afford it. I mean, especially now. I mean, you know, your income gets slashed. Maybe you're not working at all. I mean, should we still be having insurance, paying for insurance, when there's so many other things we have to pay for?
I think that's a great question, and it's so relevant, you know. And what we've seen is that this COVID environment and the economic strain that people are under has introduced almost a number of different dynamics in the insurance industry. I mean, and the financial hardship is one. You know, a lot of the big traditional insurers out there have set aside big provisions for clients potentially not being able to pay their policy premiums in future. And a lot of them, and ourselves included, have offered clients relief to try and help them maintain their policies. And that's the other dynamic, Stephen, is that at the moment, one of the last things you'd want to do is actually stop your life insurance, right? During the middle of a pandemic, that's one of the things you really don't want to do without or be without. And we need to make sure that there's awareness around that there are facilities in place to help policyholders maintain their policies, and that insurance is accessible for new people who still need to get it.